Markets fell hard today, but was it just a stumble or the start of something bigger? Welcome to Daily Market Waves from Investing Angles, where every candle speaks, every Elliott Wave whispers, and we chart the turn before the herd even blinks. Tonight's wave map decodes today's slide. Volatility. Yesterday's last-minute failure might have been the warning. What now? Dollar, still undecided, but leaning somewhere. Yields, pulling back to reload. Oil, stuck sideways, building tension. Gold, igniting full momentum. S&P 500, candles, waves, sectors, and large caps. We cover every angle. Nasdaq, an Elliott Wave perspective that could set the tone. And the feature of the day, ARK Innovation ETF and its key holdings, Tesla, Palantir, Roku, and Shopify. Live Elliott Wave analysis of ARK, and the question no one's asking. Could ARK really become a penny stock if the candles are right? Drop your ticker in the comments, we might have charted here. Subscribe, share, and hit that bell, because when the market moves, it moves fast. Let's dive into the charts, and we start, as usual, with the Volatility Index. So yesterday, it was a failure by 12 basis points. So what we have right now is a big jump. And if we look at the daily frame, technically this could be a reversal candle. However, its color and the shape still needs a confirmation. However, if we look at the futures, which are closing in 24 minutes, so technically this is a strong bullish move. This is an inside up candle, and we can see that volatility futures are back above the 8 days EMA. And yesterday, if you remember, I was discussing this potential rising 3 methods. So this is the first step in order to make this big move. So that the volatility is technically bullish, but still closely to neutral for tomorrow. And if we look at the weekly frame, just a reminder, so the last week, Friday's candle, they didn't close very strongly bearish, and they require confirmation. If they close like this tomorrow, we have a short week. If they close like this tomorrow, it wouldn't be a confirmation. Most likely, it would be a consolidating candle. And the final chart for volatility is this one. Something we discussed a while ago. It was the first on April 10th, when we said that there is a possibility of this bearish flag, bullish flag, and this would be a flag target. So I adjusted slightly because the index moved slightly lower, and now these are the targets, 59 to 79. This is the most typical ones. However, I couldn't reject 92 at this moment. Let's see what kind of formation it forms and what kind of candle it builds. So this is the perspective for volatility, although I'd like to also note that there is a possibility of one more lower low here before the real rally starts. That's a little note. Now let's move on to the dollar index and see what the greenback is telling us. So today's move, the daily candle, if it fails to close above this low of last Friday's low, it would be a third failure in a row. Potentially this could be a very strong bullish reversal, especially if the weekly also fails to close at a new low, at a new lower low, below the last week's low point. Well, we are watching, and the next candle, daily candle, and the 3-day candle, which is closing so now, and the weekly that you'll be closing tomorrow, they are critically important, especially tomorrow. And speaking about the Elliott Wave chart, nothing changes from that perspective. Right now, dollar is in our target area. Minimal target is 99.5, but the most optimal target would be 98.3 to 95.1. this is where we expect it to reverse. Let's see if it hits it tomorrow and what kind of candles and technical indicators it will produce, technical signals. Now let's move on to the bond market, and we will start with candles. So what we are seeing here is that we have a pullback, and this is potentially a healthy pullback because before we have very strong bullish candles, and yesterday we discussed the 10-day frame on pardon, not 10, it was I think it was 8. Yes, it was 8-day frame that we discussed yesterday, and we were 1 hour before the closure, and I said if this 8-day closes above the open of the red candle, it would be a strong bullish engulfing. So now we have a bullish engulfing on the 8-day frame, we have strong bullish engulfing on the weekly frames, and they are not going anywhere. Most likely this week is going to be a consolidating one, and we might see several weeks of consolidation before the next leg will continue higher. So that's the perspective, and from the midterm and large-term and long-term perspectives, yields are bullish. Now let's have a look at another frame. So this is the 10-year yields. We are seeing that the candles are moving down potentially. However, they are still sticking at the major support levels. So this candle, we had on the 2-day frame, we had 3 white soldiers and the Harami candle. Let's see if it confirms tomorrow. I highly doubt about it, but nevertheless, let's see what happens. It needs to close below the low of the green candle in order to make a bigger reversal. The weekly so far looks neutral bearish, but let's see what would be the exact level of closure tomorrow. Now let's have a look at the Elliott Wave chart. We discussed it before. So far, nothing changed here. So both paths, the red one and the blue one, remain on the table. The only thing that they might need to shift to the right. So this is still a possibility for wave 2 to complete here, but once it crosses this line, which is the low of April 9th, then the red path will be obviously invalidated, and we would be looking for a blue one for a bigger wave 2 before resuming higher. So let's see how it develops in the next couple of days. Now speaking about TLT, TLT daily is not so bullish, I would say. It was rejected at the 8 days EMA, and technically, while it is a bullish formation, there is very little technical support, and also we have a few indicators that are not very well aligned with the bullish path. And if you look at the 3-day closure today, this candle was technically neutral. It didn't even try to reject this particular doji. So far, this is neutral bearish, especially after this 3-day tower top and bearish engulfing, and the weekly frame remains strongly bearish. If we see this type of candle on the weekly frame, it still needs to have a strong confirmation, which should come in the next couple of weeks. And speaking about the Elliott waves, I think that the chart is trying to make a wave in purple. I think that the green is not very probable here. Most likely this wave is an ending diagonal, potentially ending diagonal for wave C, and ideally it should surpass the top of wave A in order to make it a very clean flat or another corrective pattern. So that's the typical formation right now, and let's see whether it advances higher or not. So that's the perspective, and I'm looking for a move lower here. Now let's move on to our commodities section, and we start from oil. So oil today formed technically a bullish candle, however it wasn't extremely bullish, I would say barely, but still the chances for moving higher tomorrow are better. If we look at the 2-day frame, this is a classical failure, triple failure to reverse and form a bottom on the 2-day frame, and the chances for a next move lower are significant. Even though we might see a bounce, continued bounce tomorrow, the chances for Monday to be a red day are significantly higher. The weekly candle, if it closes like this, it would be just a neutral candle pending another confirmation. If we look at the Elliott Wave, there is no changes here, and I think that the blue count coming very close to invalidation. If it makes it above this line, the blue count will be invalidated technically, and we would be looking for the red one, potentially an ending diagonal here. Let's see how it develops. So far it's mostly range bound move, and we are looking for a resolution of this corrective wave. If we look at our big oil companies, ExxonMobil, Chevron Corporation, and ConocoPhillips, they today formed technically bearish candles, and the chances for moving lower are slightly better. If we look at the different frames, so this is a two-day closure, and it's also a failure. Potentially, it's a deliberation pattern which with the chances to move lower. If we look at the weekly frame, a closure with the red candle would definitely negate the bullish odds, potential bullish odds for reversal, and just to highlight the bearish odds and the chances for the move lower. The somewhat similar for Chevron. If we look at the weekly candle, it's so far it is forming a bearish one. If it moves lower, well, it will be the one. And for ConocoPhillips, the daily is bearish, and the weekly is going to be bearish most likely, unless there is a very strong rally tomorrow. Most likely this will cap any bullish intent. Now let's have a look at gold. It's been interesting. So we are seeing like a very strong rally here, and the rally moved the price into the oversold area, overbought area, and right now we are seeing that candles are very well above Bollinger Bands. So this is technically punishable behavior, and we would be looking for some pullback, a healthy one or not, so we'll see. And if we look at the RSI, the daily RSI, it's been diverging, and this could be an early signal of the price reversal as well. However, we need to see a strong signal here. So until we see a reversal candle and the confirmation, gold remains bullish. However, if we look at the GOD, it continues to build a very strong bearish formation. Now we have 4 gaps in a wave, and this is something very concerning. And I would like to say that we have 2 candles entirely outside Bollinger Bands, and a pullback is just due. But let's see what kind of candles it forms tomorrow, and what kind of momentum we'll get in the next couple of days. So far, gold is bullish until we see otherwise. So that's a short commodities section for today, because I have lots of items to discuss, and let's move on to the stock market, and we'll start with candles for major indices. S&P 500, Nasdaq, Dow Jones, and Russell all fall today with strong bullish continuation candles, and the chances for moving lower tomorrow are quite significant, especially if we consider freshly made crosses 50 over 200 death cross for S&P 500, for Nasdaq. Russell is ahead of the gang, and that's a 100 over 200 bearish cross, and it's much more significant compared to the other ones. Dow Jones seems to be on track for its 50 over 200. Most likely it will happen tomorrow. Now let's have a look at the weekly closure, which is happening tomorrow. So far, if we see the candles like this, if they don't transform into green candles, which would require quite a bit of a rally, for example, for S&P 500, it would require about 3.6%, or I would say it would need a little higher, about 4.5% in order to form a strong bullish candle. Well, that's a tall order, and I highly doubt it's gonna complete tomorrow. The same thing for Nasdaq, for Dow Jones, and for Russell. Most likely the weekly candles will be bearish, and they will put a big cap on the bullish odds that were created last week. By the way, not for Russell. Russell wasn't able to form a bullish candle last week, and it would be absolutely normal if it forms a red candle and continues lower. Now let's have a look at technical side of it. This is something that we've been discussing for a while, and this is MACD bearish cross, monthly MACD bearish cross for S&P 500. We started discussing it way back in March 23rd when S&P 500 was 56.67. Right now it's 52.75, quite a drop here, and our estimate then was that S&P 500 could very well hit 4,300. If it is lucky, if it is not, we might see much lower prices. So this was a statistical call that we made 3.5 weeks ago. Now let's move on to the next chart and have a look at what we are seeing with Elliott Waves. There are three potential paths right now that I'm watching, and yesterday we discussed with our members a potential for forming an impulsive wave for wave C, extending it a little higher, a little lower, wave C of A, if Nasdaq, if S&P 500 makes it 1, 2, 3, 4, and 5. So waves 1 and 4, they didn't overlap, and there is still a possibility for this impulse. It would be ending somewhere here about 47, 40, 4,800 approximately. At this point, we don't have the clear estimate. And there are also possibilities for a more extended flat for consolidation. This could be a purple path, making a higher high here, and wave B, another wave B, and wave C for a much longer wave B of a bigger correction. And this wave could last easily for the remainder of April, the entire May, and even part of June. And if we are looking for a shorter version of this wave, we might see the red pass here. So far, all of them are corrective at this moment, and all of them are bearish, because the very first wave of the bottom hasn't been impulsive, and this is how it looks right now. So there is a concern here. So there is a possibility that this wave A has been completed here with wave C, and this would be wave A of a bigger flat. And in this case, there is a possibility of truncation. So it didn't make a higher high here, and if this is indeed a truncated wave, we might see a very sharp wave down. And today it was just a warm-up exercise for this wave. That's something to keep in mind. Now let's move on to the sectors. So what we are seeing here is technically, let's go by one. So financial, it formed a very strong reversal candle, and it finally, let me make it bigger. It finally moved below the 200 days moving average. So it was third closure in a row, third rejection. And if we look at the shorter, at the 1 hour frame, this is the one that we discussed on April 10th, potentially forming a flag here, a bearish flag. So the flag might be complete, and this is the target for the flag. Right now it's sitting at 46.50. The target would be somewhere between 42 and 38, the most typical path, most typical target. Now let's have a look at the other ones. Technology sector formed a strong dark cloud cover on the daily frame. Healthcare technically confirmed a reversal. The same for consumer discretionary. Industrials are falling, and this is a reversal confirmation. The same for consumer staples. Utilities did not confirm. They might bounce higher, and the energy is not decided yet, so it's kind of neutral. So out of these 8, only the utilities from candles perspective are somewhat bullish, and this is indeed concerning if we have a strong, so there is a big chance for a strong move tomorrow, and this move would be down. If we look at the large caps, Microsoft is clearly bearish. The same for Amazon, and this is a 2-day frame. If we look at the daily, technically it's falling. 2-day frame is a big bearish engulfing. 3-day frame dark cloud cover, and for the weekly, most likely this candle will be negated. The green candle will be negated tomorrow. The same Apple technically confirmed a reversal. If we look at the 2-day frame, it's a bearish harami that requires confirmation. So it's not that bad for Apple, but again, we need a confirmation. For Tesla, the daily frame is bearish, and we will look at Tesla in just a few minutes once we start discussing ARK Innovation and its major holdings. So, and I'd like to say that Tesla has a 50 over 200 days moving average bearish death cross. Meta is plainly falling, no questions about it, and the 2-day frame technically confirmed a reversal. A strong bearish engulfing on the 2-day frame for Nvidia. Expect the next 2 days to be down. Google is still holding for the 2-day frame, but the daily one, daily one, it's kind of bearish, but closer to neutral. And Berkshire Hathaway, if you followed our chart that we shared yesterday, there is absolutely no surprises here. So this is a reversal candle, and if we look at the 2-day frame, it's a dark cloud cover with a very good chances to move lower. So that's the perspective for S&P 500 and the sectors and the large caps. Now let's have a look at Nasdaq from Elliott Wave perspective. So what we are seeing here is the same complex wave that we discussed before, and maybe we'll start with the bigger picture first. So this was the very first wave down that we were talking about, potentially in ABC, and now we are looking for a bigger zigzag or a flat wave for bigger B. So far, the move upward has been corrective, and it's been the impulse had been invalidated multiple times. So we are looking for either wave B here or an even bigger correction lasting potentially a couple of months. And speaking about the short term frame, what we are seeing here is also a potential truncation for wave ABC. If this is indeed a truncation, we might see a very strong decline following the green path here, which could still be as another path for this wave. All right, so that's Nasdaq, that's S&P 500, and the feature of the day is ARK Innovation ETF. And I would like to start with candles. So ARK is brutally bearish. If we look at this candle formation, this is a 12 months or annual candles. What we are seeing here is that in 2020, it was an amazing growth. Then in 2021, ARK formed a dark cloud cover, and in 2022, unfortunately, it confirmed a reversal on an annual frame. And then it spent 2023 and 2024 just trying to form a consolidating pattern of something. Now there is a good chance that we start seeing the next leg down. And if we look at the monthly frame, for example, ARK is falling. It's been an inside down candle. In March, we had a confirmation, and so far, this is the potential for even bigger bearish candle. There is no surprises here. So if we look at the quarterly closure in March, this is a bearish engulfing on a quarterly frame, and the next quarter or current quarter, Q2, is expected to be bearish. Speaking about 10-day frames, smaller ones, this is the frame that formed an 8x20 EMA bearish cross, and the candle so far point downward. We are seeing on this frame a very strong cross. This is 100 over 200 periods moving averages, and if we multiply it by 10, it's technically 1000 over 2000, which is huge. Cannot imagine it. Well, now let's move on to the Elliott waves and try to make a sense of it. So this is the wave that we were seeing from the top. So top was in 2021, and I clearly see that ARK formed a very nice impulsive wave down. So this was an impulse down. This is potentially wave A. So this wave 3 is also impulsive, clearly impulsive, and there is no question about it. So this is the possibility for an impulse here. Now what I'm looking for is the potential wave B and the wave C somewhere here. And now the question is, where would it stop? I made a couple of estimates based on this potential flag, and I think this is fairly classical flag that that ARK has completed already or about to complete. And if we consider this and just use the flagging techniques, what we would be looking for is this particular area for the target. So this would be the one one, the most typical, and another one would be somewhere here. So I need to measure it. So it would be this, and so somewhere here. So that's another perspective. That would be two targets, two most typical targets for the flag. And if I did some analysis for Elliott Wave structure, for Elliott Wave, it would be the most typical, again, the most typical, it would be somewhere here. So I think that the bigger overlap here would be somewhere in this area. Let me mark it with a different color. So, and this would be the target for wave C, potential wave C, and I would be looking for A, B, 1, 2, 3, 4, 5, potentially this, and this could be longer, for example, an ending diagonal or something like this. This would be very concerning targets, 22 and 10. So this would be the typical targets. However, I would like to say that if we measure the flag and we take an absolutely classical type of this, I would say that there is a possibility of moving below $1. But I would say that this is probably extreme at this point, but the targets between 22 and 10 are fairly real for this type of formation, especially considering the annual bearish candles and the recently formed bearish engulfing on the quarterly frame. And now let's have a look at ARK major holdings. We have Tesla, which holds almost 12%, Palantir 7.5%, and we also look at Roku today and also at Shopify. Well, let's see what they have to say from the candles perspective and from Elliott Wave perspective. And we will start with Palantir. Palantir we have been tracking for a while, and what it made today is most likely a bearish sandwich, and I would expect it moving lower. It is right now sitting on the 50 days moving average, but considering the bigger candle, Palantir is in danger. This is the 10-day frame, which we keep for a while. Strong dark cloud cover, 3 attempts to negate it as we expected, and now the chances for the next candle to be red are quite high. And speaking about the monthly frame, it's not clear on the monthly frame. However, if we look at the 2 months frame, for example, everything becomes very clear. So far, whatever candle happens on April 30th, it will be bearish. And so technically this is the catch-22, but the candle is green or red, whether it makes it towards the new high or if it closes down below the previous month's low, it will be bearish. And this is just a technical call, and I would like to say that Palantir is greatly overbought on RSI, almost 88 RSI on the 2 months frame, and if, for example, it closes above the high of the previous candle and it tries to make a green candle, I would say that this would be a killer. If we look at the Bollinger Bands and look for 3 standard deviations, for example, if it moves like this, it will be a closure above 3 standard deviations. That would be really impossible. Well, that's the candle's perspective. Now let's have a look at the chart. This is the chart that we shared with our subscribers back in January saying that Palantir is approaching the end of wave 3 when it was 78. Later on, we discussed on February, the beginning of February, that wave 3 is done when it was 110. And it moved a little higher and then it started falling down exactly as we aligned. So this chart is still the original one. And if we look at the small frames here, this was the chart that we shared on March 12. And I would like to say how well aligned it was. So this is an A, B, C, and this is the target. So we have a very clean ABC wave here, potentially forming wave A, wave B, and now the next wave down would be wave C. And I think it might be somewhat similar from a size perspective as wave A. Well, we'll measure it later on, and we will talk about Palantir maybe in the next couple of sessions. Now let's have a look at Roku. So Roku technically has the same formation that ARK formed, and the candles are greatly bearish. And let me just maybe increase this a little bit. So there is a possibility of the flag. However, it's also can be viewed from the perspective of rectangle, and this would be my target here. I would say that Roku has a very good chance to move down here to complete this. After completing this rectangle, moving down here, and this would be a potential target for the stock. And unfortunately for the holders, this is the perspective target, somewhere between 21 and 2.6. Well, let's this message sink in, and let's move on to the next one, which is Shopify. I think it's in a better position compared to ARK and compared to Roku, because this wave B is much bigger, and it managed to retrace almost 0.78% of the initial wave A, and I would be looking for this type of corrective action here, A, B, and C. So this, let me change the color here. We can see it better, and degree would be minor. So this is an ABC of a bigger formation. And from candles perspective, I would say watch closely the 2 months closure. If it forms a tower top, if it closes below the November low, it would be a strong bearish reversal. And if we look at this way from the perspective of a bearish flag, so I would be looking for this particular target, and very ballpark estimate brings Shopify somewhere between 35 and 9.6 in the next leg, if it is confirmed, and there are very good chances for it to happen. Well, that's a disappointing news for the ARK holders and for the holders of the major holdings. Now let's have a look at Tesla. Tesla is our big chart that we follow very closely, and there are quite a few disturbing points as well. So let's discuss them all. First of all is the daily closure is bearish today, and there is a good chance we continue to see lower prices for Tesla. A freshly made 50 by 200 death cross, no surprises. On the 8-day frame, which Tesla closed recently, it was a inside down candle, and this current candle is not negating it. If we look at the monthly frame, it was a confirmation of a bullish reversal, and there is a chance that Tesla continues to lose its value in April and maybe beyond. And this was another very concerning chart. This is MACD cross on the quarterly frame, and there were only two of them before, and after each of them Tesla lost a lot, and on average it was like a 45% loss. If Tesla continues to be statistically consistent, then we would be looking for a 140 price, just based on the statistical estimate for the 3 months for the quarterly MACD bearish cross. Now let's move on to the next one. So this is another technical call that we made way back on February 1st, when Tesla was just approaching the weekly MACD bearish cross, and we say that it was 424 at the time. Right now it is closing 241, well, almost 200 points loss after the call. So nothing changed here. Tesla is sitting right now in the middle of the target area, so this is a great call and it's complete. Now let's take a look at the Elliott Waves. This chart was shared with our subscribers way back in January, when we said that Tesla is done for a correction, and most likely it will be forming another wave, the final wave of the correction down, which is wave C. So far we are seeing a very strong impulse, 1, 2, 3, potentially wave 4. Right now wave 4 is a corrective, and we would be looking for another wave 5, which could be an impulse or it could be a diagonal, ending diagonal. The target remains the same, 240, 140, something that we outlined way back in the previous months. Well, however, if Tesla moves lower here, 138.80, so this just to fulfill this ending diagonal, or if it makes a new lower low below that January 2023, which was 101.81, I wouldn't be very much surprised. And the final wave, final chart that we are talking about today is this one. Another call that we made for Tesla on January 21st, when it was like the final gentleman's exit. Tesla was 420 at the time. And so far we are looking for two potentials here. One is wave A, B of a bigger correction, or potentially an ending diagonal here for wave 1, 2, 3, 4, 5. So this wave down has not been fully impulsive. So there are very many overlaps that would invalidate an impulse. So we are still hesitant about these potential moves. So far, the wave down looks like an expanding ending diagonal here, but we need to see how it develops. So far, based on the candles and technicals, we should expect Tesla to move lower. However, it might be a very bumpy move, and it might take several months to go there. Well, that's all I wanted to say about ARK and its major holdings. Now let's wrap it up. Today's drop wasn't random. It was a message. Volatility flickered, yields pulled back, but they are not done. The dollar is coiling. Oil's direction is still undecided, but not the long-term one, which we discussed in our previous discussions. Gold took off. It could be way too far, so we have to be very careful here. S&P and Nasdaq heading down, one way or the other. And ARK, the candles are calling, and if they're right, the next leg might be shocking. If you are done with headlines and ready for structure, timing, and statistical edge, Join us at investingangles.com, where Elliott waves meet candles and conviction. If you watched before and came back, you're clearly serious. Subscribe if you haven't. And if you are subscribed, hit the bell so you don't miss next setup. For daily high conviction setups, join our private Discord. Master Trader Kyle posts surgical entries and exits you don't want to miss. Free reader subscriptions are now available. Come see what's moving before it moves. Until next time, stay sharp, stay objective, and remember, at Investing Angles, we chart the turn before the herd even blinks.